Okay, so a week ago, I said before the earnings call that Dan Ives, one of the biggest Wall Street equity analyst influencers, coming out and putting out that $25 price target was just weird in terms of his timing. And it got a lot of people talking about it and thinking of it. And then ironically, Dan Ives is asking them a question on the earnings call. He's one of the two
So
analysts that gets to ask them a question, which was really funny. How do you feel about the Dan Ives upgrade? Raymond James came out and upgraded them from $18 to $22, right underneath Dan Ives is 25. And does this, you said, I don't know if the stock's getting back to 12. You're kind of skeptical. Do you think the reason you're skeptical on the stock getting back to that 8, 9, 10, 11, 12 range is because there's now a little bit of a base from a Wall Street perspective forming around psychological assumptions around where support for the stock should be? And that's why if Wall Street's warming up to it and maybe Kathy's buying a lot more, it's a little bit harder to see a big dip.
Yeah, so a couple things. First off, just to follow up on the Dan Ives thing, the good news is it looks like Dan Ives didn't have any insider information. So it would have looked very suspect if Palantir did come out and knock that quarter out of the ballpark.
Yeah.
And it's like, wow, Dan Ives with that all of a sudden initiation upgrade, whatever you want to call it, and then Palantir comes in with 25% growth or whatever. That would have been definitely strange. It would have looked like Dan Ives got some sort of inside intel. So now they didn't, that actually is a good look. In terms of stock price, what I think a lot of the money that wanted to sell has kind of sold the stock now at this point in time. Usually, whenever after a company reports earnings, usually it's a 2 to 3 days of just kind of like relentless kind of selling pressure.
Yep.
You kind of bottom out and then you kind of move back up from there, right? And that's why a lot of traders will say, if a stock dumps on earnings, don't buy it for the next 2 to 3 days. Wait 2 to 3 days, then go ahead and buy it. That's like a famous thing in the stock market. But in terms of kind of my opinion, I think there's so many retail investors specifically that are very convinced around Palantir's next 5 years that they are going to snap up every share and they're continuous. Now, I think Palantir, if it didn't have the sort of retail investor base it has, I think the stock would be much lower. But I think because there's been such a relentless buying from retail, I mean, I think that after hours trading was pretty crazy, that the huge dump right away to 15 something, and then it just came back, and I think that a lot of that was retail. So there's a lot of ammunition that retail has, and I feel like that's going to kind of bottom this stock out. Now, of course, you always have the risk of what if the whole market deteriorates over the next few weeks and those sorts of things. Yeah, that could happen. But Wall Street, I think, is still trying to figure it out. I think that's what's going on with Wall Street. I do believe that as you get closer to likely S&P 500 inclusion, I think you're going to see probably another move in the stock upwards in quite a significant way, because obviously there's a lot of people that like to play the timing around that, because once you get into S&P 500, obviously there's a immense amount of funds that suddenly have to buy the stock. Now, also the bigger market cap you are going into the S&P 500 also makes it very interesting. Like Tesla, when Tesla went into the S&P 500, it was a big market cap already. I think it was at least a few $100 billion in market cap. So Palantir is certainly not going to be a few $100 billion, but it's going to be a relatively big market cap. I wouldn't be surprised if Palantir is a $40 billion market cap when it goes in or so.
I was just going to ask, what do you think S&P 500 is going to do for the company? Because I think it's a given they're going to get there. In your experience dealing with Tesla's inclusion and having a retail-heavy base in that stock, do you think it's going to matter? Or do you think it's going to be, it's whatever, they're here?
I think it's going to matter for the stock price. For the company, I don't think it adds that much. I mean, maybe it's a little more credibility. Like, hey, we're an S&P 500 company. It's good for branding, I think, especially for other large companies that Palantir's on the map. You should be working with these guys. You should see what they're up to. So I think it matters a little bit for the business, but I think more it's just a stock price thing that's going to be a benefit to the stock price over the next, we can call it, 6 to 12 months or so. But yeah, so anyways, it's a fascinating time in regards to that. And I think there's going to be a lot of people that get really, really excited about that as we get closer to that time period.
Yeah. It's going to be really, really interesting, because by November they should be GAAP profitable. And then I don't even know. I mean, you were in Tesla during that time. What does the process look like? Once Tesla was eligible, is it like a couple months until the committee gives them the green light, or does it happen overnight? How does that actually even happen?
There was a time period. I don't remember specifically how long it took, but it wasn't like it was the next day or something like that.
Right.
It was a process, and then finally the announcement comes that this company is going to be put in the S&P 500. And usually that announcement's very close to the time they actually do the move, and they kick a few stocks out, and then a few stocks get in. And so usually they don't give, from what I remember, they don't give a very big heads up in regards to that. So if you believe they're going to get an S&P 500, usually people buy it up prior to any sort of official announcement about this company's getting an S&P 500. And then obviously once it happens, then all of a sudden funds obviously start having to buy it and things like that. So, and believe me, this is one of those things that Wall Street tracks on a heavy level. A
Right.
lot of hedge funds track this, always thinking about, okay, who's the next, stocks to likely get kicked out of the S&P 500 and who's the next group that's likely coming in the S&P 500. So as this time gets closer, believe me, it's going to be on a lot of Wall Street's radar as well, in regards to this, because Wall Street's always looking for any easy arbitrage. If you can give them a 10 to 20% return profile in a matter of 3 or 6 month span, they're gonna take that every single time. So that's why I say, like, I think momentum will build in the stock as we get closer to that likely inclusion, which looks pretty dang promising right now. I'll say that. I mean, I would call it, like, if I had to put odds on it, Vegas odds on it, it looks like probably about a 95% probability now at this point in time. The company would have to screw up in a pretty major way for it not to happen. So
We got TJ the Wheel Deal with a super chat, 1999. Thank you, TJ. He says, Jeremy, do you strictly hodl or do you sell covered calls to generate some income, given you have a sizable portfolio?
I don't sell covered calls, but believe me, if I had $1 for every time a person's try to convince me to sell covered calls, I would have a lot more money.
You're not into options. You just love holding the damn stock, right?
Yeah, I don't do too much in regards to options. I'll buy a few leaps every once in a while, and then I'll hedge through options, like put options and whatnot, or buying calls on an inverse ETF or something like that. But yeah, I'm not a huge option guy. But yeah, everybody's always telling me I should do that. But my theory around stocks, right, is always be in a position to buy, always have more income than expenses. Like, it's been the same story for me for 15 years now. More income than expenses. Put that money in your accounts. When you get to take profits, but then reinvest the profits. There's very few times that I am ever pulling money out to go spend that money. Very few times. I mean, I did that a little bit in like 2014, 2015 after I left Quick Trip and I had no income. And then I started my real estate marketing company, so I need to buy a bunch of equipment and stuff like that. So I pulled money out of my Fidelity account to go ahead and fund that business. But most of the time, like, I'm just focused on growth. And to me, to pull the money out and go buy a bigger flat screen TV or to buy another chandelier or something like that is just crazy to me. Like, I can't even conceive that.
It's really interesting. It's one of the reasons I respect you a lot, because you haven't made your money through like options or like you got lucky on a call or anything. Like, you literally develop these positions for years, and some of them work, some of them don't. But the ones that work massively outwin the ones that don't. And then boom, you have actual money because you loaded up on Tesla when it was low, or Monster when it was really low.
Yeah, exactly. And so that's my name of the game, is just growth, building. I'm sure someday I'll call it quits and go ahead and I mean, if you look at what Buffett's done over time, because Buffett has always been the guy I looked at as kind of like the legend, right? He's my investing legend. And if you look what Buffett's done, he's never actually really taken money out of Berkshire Hathaway.
Yeah.
He was always focused on growth. He lives relatively modestly, right? You're gonna say he's got a private jet, but that's a business expense, so that's a write-off. But for how rich he is, like, that guy lives like so cheap, it's ridiculous, right? Like, it's hard to even conceive how cheap he lives compared to how rich he is, right? And that man never takes money out. He hardly pays himself at Berkshire Hathaway. You don't see him like, oh, I'm going to unload another $10 billion of Berkshire so I can go spend it, or things like that. So that's just kind of always been, it's more of a game of just building and growth, and just always having more income than expenses, so you can always grow the pie. And then in regards to more income than expenses, whether it's $100 extra a month, 1,000, 10,000, however much it is, then you can divide that out in between, like, I want to use some of this income over here to buy something that I want, or I can use that money to help somebody that I needs help, or I can use that money to, put to cash because I'm afraid the market's going to go down or there aren't good deals, or I can go ahead and buy stocks. So yeah, that's kind of always my philosophy in regards to this.